A very good evening and warm welcome to all the participants, our panelists, and entire TSPL team. Thank you all for joining today's very important session, which is the first and exclusive Business Connect webinar for the series on growth for MSME, technology, and beyond. Today, we are covering multiple topics to ensure seamless business operation journey. We will be addressing some major pain points and assist you in your quest for simplified business journey. By this, I would like to introduce our first speaker of the day, CA Amit Kumar Kedia ji. CA Amit Kumar Kedia ji is a practicing chartered accountant based out at Jaipur. CA Amit Kedia ji is having more than 13 years of experience. CA Amit Kedia ji is an advisor consultant in the field of financial consultancy like REDA, valuation project consulting, corporate finance, merger and acquisition, corporate restructuring advisory, and tax advisory. CA Amit Kumar Kedia ji is a member of Institute of Chartered Accountant of India, which is ICAI, All India Federation of Tax Practitioners, Rajasthan Tax Consultant Association, Tax Consultant Association, Confederation of Indian Industry, Shekhawati Agarwal Samaj, and Vidyashram Old Student Association. Now, I would request CA Amit Kedia ji to take this business event further and cover valuable topic about growth for MSME and easing working capital through new factoring amendment. Over to CA Kedia ji. Kedia sir, you are on mute. Yeah.
Good evening. Hope everyone is fine and taking care of themselves. We understand that the second wave is over, but we should always take care of ourselves and try to be connected virtually as much as. And a solution of tele, like where like I know and understand when they were locked down and my teammates were working across country from work from home, how that tele have given an life to our workings, that we can very well understand. So be safe and try to take out this hard time as safely as we can. Friends, as we know, our Prime Minister, Shri Narendra Modi, have a vision of making our country a 5 trillion economy, which will not be possible without easy financing of our MSME workings. With MSME getting finance easily and comfortably for their growth, for their escalation of their products, there need to be an easy financing. And recently, Government of India had passed the Factoring Amendment Bill, which we would be discussing today in detail. Friends, this bill would going to put in a new life in the MSME sector. We know that the bill was there in 2011, but there were only 7 factors which were able to give their services to this factoring industry. But with this coming of this new factoring amendment, there would be an N number of NBFCs which would be now giving their services to MSME as in factor. What and how? What is the factoring? How it's going to help us? How we can scale up ourselves with this new factoring amendment? That is what we would going to understand and know in this coming session. Undoubtedly, the session and the detailing is much more, but I would try to be as summarized and try to cover it as soon as possible, wherein we understand the facts of this act and how we can take an advantage. So moving forward, we understand what exactly is the factoring. This act was a 2011 act wherein the provision for assignment of receivable and making provisions of registration thereon was put in place. In addition to the contract for the assignment and receivables, which is to be taken care and that need to be included there, which and where this act is regulated and where it is applicable. This act is applicable to whole of the India, and the advantage would be taken across the country. It would be a powerful tool for financing. How this financing has this small sapling with financing, with the nourishment of this finance, can increase many folds. In the same manner, the factoring would going to help our businesses moving forward to develop. There is a misconcept or a misunderstanding when, like, the word factoring is being put in place, where it is said that it is almost similar to a bank loan, or when we take a bank loan or any type of loan, it is just similar to that loan. But it is not as such as similar to that. There is a difference between a loan and factoring, and which can be like subdivided, and which could be identified and understood by these 3 bullet points, wherein there are credit worthiness and receivables. There are 2 different things in this. The emphasis is on the receivables, that is not on the credit worthiness. In loan, it is always the credit worthiness which is being taken care, and it is in the factoring, it is only the receivables which are being taken care, and receivables are the only underlying assets which are being put in place. In loan, there are 3 parties. In case of a factoring, there are 3 parties. That is, one is the assignee, assigner, and the debtor. But in case of loan, there are only 2 parties, wherein one gives the loan and one is the receiver of that loan. This is a very small chart by which I have tried to explain what is and how the factoring works. So this is a company. The company sells its products to somebody. Once it sells this product to somebody, that organization becomes a debtor of this company. Now, the company is of a need of money. When the company is of a need of money, then the company approaches the factor. We would going to understand who is the factor in later stage, but you can understand more or less they are the fund institutes, the institutes where the funding availability are there. They may be the bankers, they may be the NBFC, they may be some government agency. So the company approach the factor, they assign their receivables to the factor, and in against to that receivables, after discounting, the factor pays to the company. So whatever money from the debtor was supposed to be received after a particular point of time, that money is being received immediately through a factor. And later on, when the amount gets due, the debtors pay off the factor and the whole transactions get closed. So if we take a very practical example, for example, in our previous example, the company sells goods worth rupees 10,000 rupees, and the another MSME or the company becomes a debtor. The company approaches the factor and tell that I want an immediate cash from it, and the factor, with deduction of their charges, with deduction of their interest and all those other charges, they give 8,800 rupees, for example, to the company. Later on, when the amounts gets due, the debtor would going to pay 10,000 rupees to the factor, and the transaction get closed. So at the end of the day, immediate cash requirement of the company gets meted out by receiving 8,800 rupees. For immediate encashing that opportunity of payment, they needed to pay some value, which comes to around 1,200 rupees. This value would always going to depend on the time value. So if the data is of a month, 3 months, 6 months, 12 months, the value would definitely would going to differ on the basis of that, because it would going to depend on the time period for which the factoring have been done. So in the 8,000 has been received by the company. The debtor pays after the certain period of time which have been decided at the pre levels. The debtors pay to the factor 10,000 rupees. So the factor makes a money of 1,200 rupees, which would going to cover its interest charges and the other charges, the processing fee or any XYZ other costs that would be covered. And the debtor who needed to pay 10,000 rupees after 3 months, his payment has been done. So all these three transactions get closed. The time value of 1,200 rupees is being earned and is been expended by the company and the factor. So I think with this example, you might have understood what and how this whole transaction of factoring would be done. There are some definitions. If we go through those definitions, it would be better for us for understanding, for a better clarity moving forward, for understanding the factoring done. So the assignment means transfer of assignment of undelivered interest of any assigner in any receivables due from any debtor in favor of a factor, and includes an assignment where either the assigner or the debtor are situated or established outside India. So the factoring could be in India also, and it could be outside India. We would going to understand what and how many types of factoring are there. That we would going to understand more in later slide. Who is the assignee? Means a factor in which whose favor the receivable is transferred. Who is an assigner? Means a person who is the owner of any receivable. As we have understood very clearly, the debtor. The debtor means any person liable to the assigner, whether under a contract or otherwise, to pay any receivable or discharge any obligation in respect of receivable, whether in future, conditional, or in any contract. So that is the defined in wherein these four major key holders of this transactions has been defined. There are some silent features for this regulation, wherein the Company Factoring Regulation Act, without obtaining any registration, anyone cannot do this factoring business. So they need to be governed under the regulation of RBI, and they need to take a certificate. They need to take a registration from Reserve Bank India. Who all are exempted are like National Housing Bank, SIDBI, Exim Bank. These all are like exempt. So as we have discussed previously, who can be the factors? So NHB, SIDBI, Exim Bank, NBFCs, they all can be the factors for the factoring business. The law is applicable to business entities That is, they may be micro, they may be small, medium, large, that are like applicable to all of them. One more and a very key point is that all transaction of assignment of the receivables in favor of factors shall be registered with the central registry established under the SURFACE Act 2002. The registry record shall be available for the search of the public. As we understand a very small example like a CIBIL, in the same manner, all these information need to be documented in a highest authority of this whole business, wherein each and every transaction would be recorded and put in place. That is the key reason that if any default or anyone does not give an obligation, does not pay off, then that information would be passed on, would be shared by other people also, so that if any defaulter do arise, then it is for the whole system and the system does not collapse. So factors are not financial institution for the purpose of SURFACE Act and hence will not have right to enforce without intervention of court. That is a very important point which need to be noted. And the best and the most important thing is that this factoring thing is not liable for the Stamp Act. So there is an exemption which have been given in Section 8D in the Indian Stamp Act, wherein all these transactions of factoring are not liable for any registration under Stamp Act, and no stamp duty is to be paid. That would definitely going to save the cost of all these factoring which have been done across the country. So this is across the country, legislative of the state, but in the central act only the amendment have been done, wherein there would no stamp duty which would be applicable, levied on these transactions. So what are the objectives of this act? We understand it in a very small way. The biggest factor is the liquidity. We know whenever we go to the market as an MSME, SME, always there are questions are being asked. What are your past experience? How you would going to give security? How you would going to pay back? These are the very, very basic questions which any banker asks us. And because of this, the scalability of our business get reduced. Now we have a debtor at our books. We have an invoice with us, which can be pledged, which can be given. And with that, we can take out money. We can take money from the factors. This would help us in working capital increase. This would going to help us in increasing the growth of our business. Our health of business would going to improve very phenomenally. Reason for which now, as soon as we sell our product, we would be available with finance. Now, the finance would be available just on a go of say, we have sold it, we just approach the factorer and the factorer discounts and give us the liquidity. So no waiting for these 30 days, 60 days, 6 months or a year for our receivables to come and be encashed by us. So what are the types as discussed previously? These are the basic types of factoring, wherein the resource and non-resource factoring, advance and maturity factoring, domestic and international factoring, a full factoring, disclosed and undisclosed factoring. We very quickly understand these type of factorings. So as we, from the name itself is goes, what is a domestic and an international factoring? When all the three parties or I can say most important, the company and the debtor are in the country itself, then it is a domestic factory. When the company and the debtor are of two different countries, then it is an international factory, wherein like almost like it's an export business, wherein products is being exported, and because of the export the factoring comes in place, then it is an international factory. So there are basically two factors in these factorings which gets involved. One would be the export factorer and one would be the import factorer. Because the country have changed, the rules regulation have changed, so both the factors would going to coordinate with themselves rather than factor coordinating with the debtor. So the counterpart factor would going to take care that the receivables have been received from the debtor who is outside the country, and the factor in the selling country would going to ensure that a proper encashment, proper agreement and understanding from the company is being created. So in this case, because of being export, four parties get involved, an additional import factor gets added. What is a recourse factoring? So this is a type of factoring in which the protection is being received to the extent that 75 to 80% of the invoice receivables has been factored, and the interest charge from the date of advance till the date of collection is being charged, and the credit risk is with the client. So factor does not participate in the credit sanction process. That is a different type of factoring which has been adopted. A non-recourse factoring in the type of factoring where the offering all the types of services, for example, finance, sales, ledger administration, collection, advisory services, debtor protection. It gives protection against the bad debts to the client. In other words, in case of customer failing to pay, the factor will have no recourse to the client and will have to absorb the bad debts himself. So this is a very important type of factoring. Another type of factoring is undisclosed factoring and an open account receivable. The factoring does not follow up in collection of payment from the debtor. The debtor has the debtor may not be aware of the factoring arrangement and payments to the assigner, and the factor receivable payment of invoice through assigner. So herein the things are bit covered, and because of this covering, the things does not get very much disclosed as we have seen in the previous term. So registration of factors, because of the time, I would be skipping this. Reason for which factor registration is almost being done by the financial institutions. We at MSMEs are more or less not required to understand and know about this. That is a prerogative of the financial institution. The most important part which I would like to take here is the ones which are marked in red and which have been scribbled also. That is that previously what happened was there was a 50% of business which needed to be coming to a factorer company from the factoring business. Only those people, only those NBFCs were eligible to do this factoring business. But after the Factoring Regulation Amendment Bill 2021, this threshold have been removed. So now, because of this threshold being removed, each and each and every NBFC is now available to give us the fund. Now each and every NBFC would be available, can do an factoring business, and through them we can avail fund. So it is a large and phenomenal exposure which have increased because of this amendment. Now a small NBFC can also start this business and do factoring. So approaching some specific or limited NBFC and approaching a large scale of NBFC, the difference is there, and because of this the horizon have increased. So do at the time of liquidity, the liquidity would going to increase for us as MSMEs. Because of some shortage of time, I am skipping this. So we directly come on the importance of Factoring Regulation Amendment Bill 2021. What this amendment bill had taught us is because of the COVID. There was a large financial crunch which was going through MSMEs, which we have seen in the COVID time. So the government have came with this amendment and it got passed in July 29th, 2021, wherein it would going to provide working capital for the micro, small and medium enterprises and would going to improve their financials, working capital through the non-banking financial institutions. So these are the 5 key points which have been put in place. The TREDS to registered charges, RBI to regulate it, no time-bound registration, NBFC factoring threshold have been relaxed, and alter in definitions. So now in the amendment, the receivable, assigner and factor business to bring them at par, all of them as per the international definitions. And as we have understood previously, there was a relaxation in the NBFC factoring threshold. The bill seeks to amend the Factoring Regulation Act 2011 to widen the scope of entities which can engage in factoring business. The current law, which gave Reserve Bank of India authority to allow non-banking finance company to remain in factoring business only if it was their principal business. There is more than half of the assets were to be deployed in income earned for the factoring business. The bill removed the threshold and opened up the opportunity in business to more non-banking lenders at that time and to the small businesses. So that is the biggest opportunity which had increased and which have arrived because of this amendment. What is this TREDS? Just we understand it quickly. The bill states that the trade receivables are financed through Trade Receivables Discount System, that is in short TREDS, and details regarding the transaction should be filed with the central regulatory on behalf of the factor. This TRDA would be an electronic platform to facilitate financing to trade receivables of MSMEs. As discussed, RBI would be regulating, and there is no time-bound registration. The 30 days time period for the factoring to register the detail of every transaction with them, and the authority of such transaction with the central regulatory setup, registry setup under the securitization regulation have been gone away and have been put in place. What are the significance of this? The significance would be that the allowing of this non-NBFCs would going to increase the supply of money in our system. That would going to reduce the cost of funding. What used to happen because of the lesser liquidity, the cost of funding had increased tremendously. that would going to ease out. The liquidity would be giving more smooth working. The atmosphere, there would be healthy competition which would be coming, and the provisions of the act would going to help more and more. There are more than 9,000 NBFCs which would be now available to these MSMEs and will definitely help our country in improving the GDP, because there are more than 40% of the export and manufacturing sector is being controlled and worked out from the MSMEs. So with this, I conclude this small presentation. If the time allows, we can take the question answers. Thank you. Thank you.
Thank you so much, CA Amit Kumar Kedia ji. You have shared your valuable inputs about this new amendment. I'm sure our audience get very insightful information from you. So as you said, if the audience have any questions or any doubts on this new amendment, you can drop your question on the chat box Q&A session. We are definitely try to revert you as soon as possible. So now we have the second speaker of the day, Mr. Pugal. Before I hand it over this session to Mr. Pugal, I would like to give brief introduction of Mr. Pugal. Mr. Pugal has 37 years of wide-ranging experience in the field of accounts, finance, statutory, and training. Mr. Pugal has conducted over 300 GST domain sessions for various stakeholders like chartered accountant, tax practitioners, telepartner ecosystem, customer varying from trading SME to manufacturing business. Mr. Pugal also conducted faculty development program for college professors and faculty across India. With the introduction of VAT in UAE, Mr. Pugal has conducted 3 sessions for ICAI Dubai and over 10 sessions for the ecosystem in Emirates of Dubai, Abu Dhabi, Jebel Ali, and all. Mr. Pugal has handled audit function for over 10 years, covering spectrum of business in trading, manufacturing, hospitality, professional services, entertainment, and non-profit organization. Now, I would request Mr. Pugal to take this business even further and cover valuable topic about growth for MSME. Over to Mr. Pugal.
Thank you, Indrajit. Good evening to all the participants. And I think that was a fantastic session by CA Kedia ji, where, basically now we have a large spectrum of lenders who can actually, be as a savior for, especially for MSMEs in our country. And with this disastrous, pandemic of the century, the COVID, we all know that, not just India, across the world, businesses have been suffering. And one of the biggest hurdle, drawback, or the difficulty people were facing is obviously the working capital or the cash flow has been a very, very difficult thing. And I think we have to really salute our government for bringing in this, very, very critical and important amendment to the existing law of the factoring. Where like I said, sir had mentioned that there are more than 9,000 factoring lenders, which I think as an MSME, we can go in for a working capital, right? So all this is fine. The most important thing that now we have to keep in mind is that how do we this brings more responsibility for the business, and also it requires of a systematic recording of your business transaction, bring in a lot of discipline, and also bring in a lot of transparency. So to take full advantage of this new amendment, which allows our MSME to, basically have a faster cash flow or a working capital to continue their business without any hurdle, it is very important that you have a technology which is going to basically aid you or assist you in bringing this discipline and structured way of capturing your data, such that you at any point in time, by click of a button, you are able to know the exact position of your receivable, payable, and various other things. So I have a small presentation which basically I'm going to cover on how can you basically manage your receivable for a better working capital arrangement that you can have through this latest amendment. And also what are the things that you need to see. Most important thing that we need to now keep in our mind is that, apart from various other costs, sir had mentioned, it comes to almost 12% of the value of the bill, which is going to be an additional cost for all the businesses, which I'm sure that all of us know that it is going to eat away our bottom line. Tally technology is in for over 35 years. We have been providing business solution for our MSMEs in the country. We will see that how can we leverage the features and functionalities of Tally for us to have better visibility, control, and transparency on this new amendment to take advantage of generating working capital faster, swifter. So technology to manage our finance. So it's basically technology, and in this COVID, we have seen in the last 16 months that we have seen that people who have adopted technology, who have gone online, are able to survive to an extent. And we have now learned a lesson that it is very important for us to be adopt technology going forward. So what are the things that we can do, especially from a managing financial part of it? Okay, so the part one, basically, I can say that you have two pillars. The two pillars are, one is managing your finance, and the second is how well you are able to optimize your inventory, because more the inventory is, your working capital is going to get blocked. So the first pillar is that how do we take control of our business? So I can say that 3 C's are very important. One is definitely your cash flow management. In context with the today's subject, how do you manage your cash flow? What all things that you can do using our technology for managing your cash flow? The second is that additionally, you have to remember, if you are going in for this, bill discounting or this instant working capital, you have this additional 12% of your bottom line getting shrunk. So how do we manage? What are the cost cutting measures that you can bring so that you have better control over your costs? So, and the most important thing is that choosing the right technology. So we from Tally believe that, the kind of technology that we have been providing over 35 years for our MSMEs, believe that it brings in lot of, you can do lot of business transactions with better control over your activities. The most important aspect, receivable and payable. See, one very important thing. One is that, yes, you are, getting your receivable factored through these factoring agencies or in the units. Two things are very important. One is that you have to manage your receivable. So sir had mentioned that there is this recourse factoring, non-recourse, undisclosed, where the liability to collect becomes more, especially in case of recourse factoring. The entire liability of collecting the money still is with the seller, right? And the second factor that we have to remember is that your supplier is going to discount your bill with this factoring. So, and since this is going to be captured in the registry, it becomes a public. So, which means basically for every MSME, the credibility. So, if you are defaulting on your payment, if your customer is defaulting, his credibility is at stake. If you are defaulting, then your credibility is at stake. So we have a beautiful feature in Tally, which is your receivable and payable management. What all things that you can do? Now you have to get more, like kind of an automation you need to build into your receivable and payable management, so that the system can take care of, these tracking that is required, especially during in this particular subject that we are discussing. So what is that we could do? So the default credit period. So now we have to be very careful and make sure that the more the credit period is, your damage is going to be more by way of the discounting cost. So you have to now decide what is the credit period that you would want to give to various customers of yours, and how can you set this up by default for those customers, so that every time you really don't have to worry about, the system is going to take care of it. So we have a feature. See, basically, I'm not going to get into the detail of the feature and how it is going to work. I'm just going to give you that what are the features that are there and how you can use this for management of your flow and working capital. You can set up a default period. Important things that while you are invoicing to a customer, if there are any overdue bill, the system will immediately, give you a warning or a message saying that these many number of bills are overdue, so that, you have clear information about the kind of action that you're going to take based on the outstanding. So you can set up all this. What I'm giving you is that one-time setup you can do at the master level, and Tally is going to take care of everything. And the other critical aspect is that you can specify a credit limit for your customers depending on your transaction and the relationship that you have with your customers. So you can set up a credit limit. So once you set up a credit limit, Tally will ensure that if the outstanding if there is an X amount of outstanding, and let us assume that you have given a credit limit of say 10 lakh rupees to a customer, and there is already an outstanding of 8 lakh rupees from this customer. Now, when you are going to do a fresh invoice, Tally will allow you to invoice this customer only to the extent of the balance amount of credit limit, which is 2 lakh rupees. Beyond that, you cannot do the billing unless and until you don't, with all security and other thing, you go and enhance your credit limit. So that is other thing that you can do. The next one is basically, in case if you are getting any post-dated check from your customer, you can consider those as amount being virtually received, though the money is going to be realized at a later point in time. For consideration of your credit limit, you can enable this additional feature. So this way, you have a better control over your receivable and payable management. What does Tally do? So this is what basically, when you are creating a party ledger, you can set up the number of credit days, you can set up the credit limit, and various. So this is where you set up your credit limit, and Tally is going to take care of when you're doing the invoicing, and it takes care of the outstanding also. Now, when you're doing an invoicing to a particular customer, if there are any bills which are overdue, so Tally is going to give you a message or a warning saying that before you complete this invoicing to the customer, it is also going to remind you saying that, hey, look, there are so many 2 bills or 3 bills are overdue. So that way, you are informed, and then you take your decision on whether to go ahead or what is the course of action that you would want to do. Now, this is where is the credit limit, where the system is going to stop you. You cannot go further. You cannot save this particular invoice when you're making this, where if it is exceeding the credit limit, it will not allow you to save this invoice. So this is one aspect of it, where there are a lot of things, you can do age-wise analysis and a lot of other things. See, the most important thing in case of a bill factoring, what happens is that you make a sale to a customer, the outstanding is there from the customer, you discount this bill with your factoring agency, and basically you need to have a track. So one, you need to have a track of the bill, whether the customer is paying the factoring agency. Also, you need to know this information, and what are the bills that you have discounted, whether those bills have got realized, and this tracking is very important, especially from the credibility point of view. So you need this. So the Tally's bill-wise detail will take care of all this information. So how do you do? See, one is the customer thing. You can do it. Now, a factoring agency is not a customer, where you have multiple bill which you have discounted, but then you need to keep track of them. So Tally also has a feature where you can leverage the bill-wise detail, not just for your trading account, that is your sundry debtors or your sundry creditors, but you can do this for your non-trading account also. There is a feature where any loan installment, if you want to handle, where you get proper cash flow management, if you want to do on a monthly basis, you can enable this. And most important thing is that tracking of your factoring due can also be done. So you might probably sometimes you might have multiple factoring agencies where you would have done your bill discounting, right? So all those things can be managed through this leveraging of your non-trading bill-wise feature also are available in Tally. So the next important thing, how do you manage your cost cutting? So one is there is a visible cost, and then there is a hidden cost. Right? The visible cost is all your expenses plus whatever is the charges that you are going to bear for discounting this invoice, or visible cost. What are the invisible costs? In case if there are any outstanding which you have to receive, and if the customer is not paying those amount as per the agreed credit term, the most important thing that we lose out, many of our MSMEs, we ignore this fact, okay, of the loss of margin by way of return on investment. So any credit that we are offering to a customer, we have to know that we are giving interest-free loan to the customer. Right. So it is very important for you to make sure that, the money you are going to get back within the credit specified period. Right. So if you're not getting it, what is the invisible cost or the invisible loss that you are bearing, so that this information will give you a better insight for you to now take a relook into your credit policy for different customers, right? So one is that, we have a beautiful feature in Tally called interest calculation, where it is like a what if scenario. You can play the game of what if scenario. You really don't have to charge your customer the interest, but at least what is the damage that you are bearing, and ultimately that what is going to be your bottom line. So this is what basically this feature is going to help you. And once you configure this at the master level, by click of a button, it is going to give you this report. And this report, if you see the arrow that I'm showing, even though there is no outstanding for this particular party, Tally is calculated interest. You can specify what is the rate of interest that you want to calculate. You can do simple interest, you can do compound interest, whatever is the way you feel is better for you. Okay, so even though the final amount as on date is not outstanding, there is a loss of interest that you have suffered. Here in this case, it is 1635.07, which means the customer has made the payment, but then he's delayed beyond the credit period. So the Tally also will calculate interest on the delayed payment, and it will tell you this is your total virtual loss that you are undergoing. Okay, so this is another very important aspect that you can do. Now, by doing all these things, automatically you can have your cash projection on an ongoing basis, month on month. You can, so the next 3 months how rosy is the cash position or your working capital position. And once you bring this factoring part, you can incorporate that also into your cash flow as outflow and inflow. All those things can be managed within Tally. And not only just your receivable and payable, you can also make provisional transactions for all your future expenditure or any other future income that you are going to get, so that 100% you will know exactly what is going to be your cash flow projections month on month. So once you do all these things, just by click of a button, you see here, you are going to get your cash flow. All the receivables month on month, it is going to tell you what is going to be your cash flow position. And also you can, this is the provisional entry that you can do month on month, you can do for the entire year. So it is going to tell you what is your projected expenses or your other income, which is going to impact your cash flow. The next very important aspect is optimizing your inventory. Now, all of us know the longer we hold the inventory, our working capital is blocked. How do we get an optimum inventory management? And also, how do we get the visibility of what are my products which I should be concentrating, and where is what kind of, how can we get this information by click of a button? So that way it helps me in my better working capital management. It also helps me in better inventory management. Okay, so what are the things that you can do? The second most important pillar, especially for businesses who are in trade and manufacturing, this is a very important and critical aspect. So how do you optimize inventory, and what are the things that you can leverage out of the Tally technology? So one is that, like you can view the fast moving, slow moving or non-moving items. So it gives you a visibility so that you can take a better decision on what item that you're going to do. The second aspect is, again, very, very critical aspect, is that you can see any item that you are dealing, what is the profit margin that you're getting on this particular item. You have 10 item, which item gives you better margin, so that you can see what is the additional business opportunity or the expansion of your business plan can be decided based on the profit margin, not just on the products. One, you will get each product, what is the GP that you have earned as on date, and also you can see every invoice. Now, every invoice you have 12% if you are discounting, right? So you need to know what is the GP that you have earned in this particular invoice. You might be having an item which gives you a 10% GP, 20% GP, 5% GP. But if you are making an invoice with all this item, does that particular invoice gives you a profit? What is the GP that you have earned in that particular sales invoice? Okay, so these visibility is very, very critical now before you jump into your factoring activity or your bill discounting activity. It is very important. Right. And also you can see your committed supply. If you have committed to a customer, there are features. Tally has a beautiful feature of purchase order and sales order management, whereby enabling that you will know exactly as on today what are the commitments that you have made to your customer, whether you are able to honor the commitment that you have done to the customer. And also through a purchase order management, you will also know that what are the orders that you have placed which you are going to receive on time. And again, there is another very nice feature where you can set up a reorder level, minimum order level in the system, so that by click of a button, Tally is going to consider everything. What is your stock? What is your purchase order pending? What is your sale order pending? It will arrive at the net stock. It will know once you have given the reorder level, it is going to check the reorder level, and Tally will tell you what is the order that you need to place, what is the quantity that you need to place as an order for this particular item, for all those items where you have set up a reorder level. So what is the ultimate result that you're going to get out of this? The ultimate result that you're going to get out of this is that you will have a just-in-time stock. So this is very, very critical for your working capital. This is like your second hand of your working capital. One is your receivable. Second is your inventory, better inventory management. Okay. Now quickly, if you see, just by click of a button, you are going to see what is the gross profit that you have earned for, these are my items that I'm dealing in. It is going to tell me what is the gross profit I've earned and what is my gross profit percentage that I've earned. And not just that, you can go to your sales invoice, and then you can now, there is this button where you have this, say, show profit. Just by click of a button, every calculation Tally is going to do it automatically. So you go to this invoice. So I've taken this invoice for a particular period, and I just click a button. It is now going to tell me what is the GP that I've earned in this particular invoice for that particular customer that I have raised my invoice. Okay, and this is where you, once you set up your reorder level and the other thing, this report, again, by click of a button, it is going to tell you, okay, so what is your closing stock? What are your future or your upcoming stock which is going to come in? What are your commitments which is going to go out? What is net available with you? Based on your reorder level, Tally is going to tell you what is the shortfall, and now it will tell you this particular item, this is the order that you are going to place. So these are two important pillars which is very important for you to manage, especially if you would want to take advantage of this new amendment of the factoring that is there. So it brings you more visibility, better control over your receivable, payable, and working capital. Now, just to quickly, I will take a couple of more minutes. Okay, where we have now come with Tally Prime, which we released on 9th of November on 2020. This is, again, you can say it's a very profound technological advanced business solution that we have provided for our patrons, MSMEs of our country. So this is where we have brought this new features which gives you better control over your business insights, better control over analysis, better control over your analytics, and all those things. So what are the key highlights? So if you see, the key highlights is that the look and feel has changed, but don't get scared. 95% of the activity that you do in Tally ERP, people who are using Tally ERP, you can do the same thing. Creation of your master, passing of your voucher entry, looking into your report, everything literally is going to be the same thing. It is not a paradigm shift in your learning curve. It actually helps you to learn better. And in the best part is that Tally Prime allows you to discover the information that you are looking for much better way. Right. So then, we have this top menu, which becomes, universally you have, the experience of using a software. We bring this top menu. There are a lot of other things. Chart of account. There are enhancements that is done. Then you can now the browser. Literally, your Tally is now you can make Tally like the Windows Explorer browser. So the way you browse your data or folder in the Windows Explorer, similarly from within Tally Prime now you can browse and find out where your data is there. You can find out with the browser thing. Then there are single things. There's a lot of other things are there. Which basically again what I would request here all the participant is that we have our partner ecosystem where we keep conducting a lot of sessions where we will get in. Definitely we will keep sharing those information. We would request you to see whether you can attend those sessions, so that it helps you to understand the technology better, so that you have better control over your business activities. Okay, so these are the various things that we have done. And also the discoverability part, which I'm talking, is that basically we have a new menu where, again, if I can put it in a normal terminology, we have introduced a new search tool, which is like we call this in Tally Prime as go-to. Now, in my own words, if I can describe this feature, it is like the Google of Tally. So you want to know any information, you go to the browser and then go to the Google and then ask questions. Similarly, you go to Tally, any information that you are looking for, basically you just type there, you are going to get it. Now, this is where your discoverability is much faster and easier. Dependability on any other person will drastically reduce. And with the release of Tally release 2.0, which we released on 27th of July 2021, we have brought in this very long aspired feature of saving the view. Very simple. Many a times as an owner or as an accountant, basically you would want to get a particular report. You would go into that particular report, you will do some configuration, you will do some filtering, you will add some extra column, or you do one comparison information, and you would have done, say, about 6 or 7 steps you would have done. Now, every time you want to see this particular information as a new report that you want to see on an ongoing basis. So earlier, every time you have to remember what is the step that you are doing. Sometimes even I would have forgotten what is that filter that I applied or what is that configuration that I did to get this report. Now you really don't have to worry. With this save view, all the configuration that you have done, the moment you get your desired report that you are looking for, just say save it, give a name for it, save it, and later on you can go to that. It will give you the list of all your report that you have saved. Just click on that, and you are going to get the report instantaneously. So there are a lot of other things that you can do. Again, we will help you in case where you want any assistance from us. Now, from 1st of May 2021, HSN-wise, rate-wise information has to be provided. So you will now get this information from release 2.0 onwards. Okay. Important notice for people who are still on Tally ERP. We would like to say that, all the development of any new feature or even a bug fix will be now carried out only in Tally Prime. So all new features, new enhancements will be on Tally Prime. So literally you can say that development life cycle for Tally ERP is ceased. Right. So the faster you migrate, it is better. And again, it is again, if you see Tally Prime as a software additional upgrade, you really don't, it is free of cost. You really don't have to pay anything extra, except that you have to just make sure that you have a valid TSS. Okay, so once you have a valid TSS, all you need, and if your TSS is expired, don't worry. If you have not renewed for the last 5 years or 10 years, don't worry. Just renew it now. You can download Tally Prime and enable, you can activate your license for Tally Prime once you renew it. And from year onwards, you will keep renewing. If you renew the license, then year on year, whatever is the new enhancements, new features that Tally brings in, you will be eligible for free upgrade as long as you have a valid TSS. Okay, so that's all I have in my session. So if there is any question, probably I think you can take over, and then we are now ready to take questions if there are any questions, Indrajit.
Yeah, thank you, sir. Thank you, Mr. Pugal. Yes, the audience have already asked a few of the questions, and which CA Amit Kedia ji is already reverted on that, answered that. So yes, if anyone have any question, they can put on the chat box. We will definitely try to answer all the questions. And again, thank you so much, Mr. Pugal, to share your valuable inputs about our today's agenda. And I would also like to thank again to the entire audience to join this